the last of the hand sanitizer. I don't know what I'm gonna do. Hey, the results are in. You are clearly interested in my stock picks, my opinion, things that I've learned, things that I'm learning every day. I gotta start out by saying I am way behind on my investment education. I should have been better prepared with my own knowledge and the amount of money that I have ready. I went through the 2008 housing market crash. I was a new home construction superintendent. I saw every stage of that train crash. I remember going to our monthly meetings and they were like, we got to have more production. Such and such builder put out this many homes this quarter. We have to be at these many closings for this quarter. And I remember I kept saying to myself, who is going to buy all these houses? Now, there was mass immigration to the metro area that I was building in. And that's who they were selling to. People were moving from every state in the country to live where I was building. That's who was buying. It started slowing down, and they're like, okay, we don't have this mass immigration anymore. We need to find more buyers. That's when they opened up the subprime lending market. Basically lending money to people who should not be taking out home loans just to get closings. So what happened is the builder had their own mortgage company. That is what was traded on the New York Stock Exchange or the S&P 500. They were a Fortune 250 company. And what they would do is they would get these loans, they would get the people in the house, and then they would sell the loan. So they would get rid of these risky loans. A lot of them were sold to Countrywide, who eventually did go out of business. A lot were sold to Bank of America, who somehow managed to stay in business. I saw that. And then I saw the comeback and how long it took. I'm obsessed with the real estate market. But we're going back to 2014, 2015. I changed my sales pitch. I've talked about my first $10,000 month. And a few months later, that was in May. It was in May. I had my first $10,000 month. And I want to say it was 2015, maybe 2014, and I couldn't believe it. All I did was change the way I talked to customers and just asked for more money. Later that summer, I had my first $18,000 month, and I had a $20,000 month. It was crazy. This is prior to any YouTube, no sponsorship, no ad revenue, and I was still pretty heavily dedicated to my long-term investment being real estate, because of what I knew. I started paying more attention to the wealthy people that I did work for, and that they had this diverse portfolio. Kind of a cliche term that's thrown around. It's kind of annoying how repetitive these buzzwords are used on social media. They had real estate, they had stocks, they've got short-term plans, they've got mid-term plans, they've got long-term plans. So I started a long-term plan. I got set up with Edward Jones, have a financial advisor, and got a retirement plan set up, the traditional IRA. That's for when you're old. There is a certain amount every year that is tax deduction that reduces your taxable income that you put into these IRAs. So most people just max out that amount. Used to be $5,500. It might be up to $6,700 now. The max that you put in to your IRA that reduces your taxable income. I decide, okay, you need to get a new truck. And I was able to pay that with cash. Of course, you don't go in there with $100 bills. I got a cashier's check from the bank down the street. Went back to the dealership, gave the cashier's check for the negotiated price, and left with a new truck. So after that, check mark was cleared, got a reliable vehicle. It's time to start saving for that real estate. Talked to my financial advisor saying I need a short-term plan. I need to put money somewhere that doesn't get reduced by inflation every year, because I anticipate on buying a house, a fixer-upper rental house, in a year to a year and a half. I got set up in a money market account that makes about 2.5%. I can just do automatic transfers from my bank account straight in there. Whenever I would get a paycheck, I would immediately transfer it because I'd keep a working amount of money in my business accounts. There's a checking account and a business savings account. And there's a comfortable safety net in each one. It's about 10 grand in each one. Sometimes the savings account gets up to 20 grand. And I still have 10 in the business checking account. Putting in $10,000 to $15,000 a month into this money market account since middle of last summer, around last July. It just, business was good. I was also talking to a lot of the customers that I've been working for 5-7 years who really, really like me, and they share information when I ask. I'm a sponge. I, ask questions the right way. Don't want to press too hard on a lot of these rich guys because there's a ton of gray areas in rich people keeping their money. And they were like, it's not a time to buy. It's not a time to buy stocks. It's definitely not a time to buy real estate. We're all just holding on. But what we are doing is we are investing money into our rental properties as a way to maintain the value and increase the value of these properties. We need to put our money somewhere, so we're putting them back into these properties. So nobody's buying anything. They're saving and waiting. Waiting for what? Waiting for the market to come down, real estate and the stock market. A lot of people were thinking that there could be a crash because it was up so high, or it's going to come down. There's lots of theories. It can only go up so high, so fast for so long. And I've been waiting and having this money build up in this money market account, burning a hole in my pocket, very hard not to spend it. So that's why I immediately get rid of it by putting it into this Edward Jones money market account. Man, this story's getting freaking long just to get to the point of the stock picks. The stock market starts crashing. It went down to 11%. Previously, I talked to my financial advisor and I said, what is a significant event in the stock market that I should buy? These are my goals. And at the time, the goal was midterm, not short term yet. We'll get to that in a minute. We talked about some ETFs, and he said a 10% drop or more is significant, and we should look at buying in at 10%. So stock market drops 11%, and we talk, and I buy 15 grand into an ETF. Bought I think 82 shares. And that is a long-term 7-year return. So I put it away and I'm not even going to focus on it. I'm going to look at it for 5 to 7 years. Our next conversation was when the market dropped again. And I said, okay, well, here's where I'm at. I see a potential to make a lot of money. I have a short-term goal now. I want to get to long-term capital gains tax, which I think is a year and a half. So I want to keep these investments that we're going to be making in the future just to get out of that short-term capital gains tax, which I think is a higher percent. We came up with a list of stocks to watch. I did my own research with talking to friends and online. Disney was the one that was my second purchase. We said, okay, when we can set up an automatic buy so that you don't have to call me, I don't have to get a hold of you. And so we set that at 85 bucks. So when Disney dropped to 85 bucks, even though I was on the phone with them when it was at $86, and while we were on the phone, it automatically bought at 85. It did drop to 80 bucks that day, but has since gone up past 85. It got up to 92. It's sitting around 88 right now. That's Disney. Disney is where I will double that money. Could be 2 years, could be 3 years. Maybe it'll only take a year and a half. There's actually 5 more. 3 of them are higher risk than the first 2. We can start with the first 2. That would be Delta Airlines and United Airlines. You go back to around 2009, during the last recession, you could buy United Airlines stock for $3 a share. And last fall, it topped out at $90 a share. That's 30 times the growth. So you went in with $100,000 of United shares. You turn that into $3 million. 10 years. Yeah, about 10 years. 9 to 10 years. 10 years, yeah. 10 years. It made $3 million. I probably would have gotten out around $2 million. I'm going to see what happens on Monday, and I believe I'm going to set a buy-in of both United and Delta at $10 a share. Could it go down to single digits, $3, $5 a share? There's a good likelihood that it could. Those are two big airlines. They're not going to go away. Their value is not $3 a share. If I bought at $10 a share, I believe it could easily go to $60 a share. That's what it was last year. So in a year and a half to 2 years, I anticipate it bouncing back to at least $40 a share. So that's 4 times. So if, say you put in $100,000, you get $400,000. You put in $10,000, you get $40,000. I don't plan on going in all at once. I'm kind of staging and staggering and watching every month, every 2 weeks. Plan on being in about 100 grand into the short-term turnaround. That would be Disney. That would be Delta, United. Now there's 3 others that are the higher risk. And that would be Uber, Lyft, and an online mobile banking company called Allied Financial. Both Uber and Lyft came out. They did good, and then they dropped, and they came up, and now they're down again. So one of those 2, Uber and Lyft, is going to take off. There is no timeline on that when that comes back. It could go up to $1,000 a share. We've been hovering. I think we got to as low as $14 a share on Uber last week. I think they're sitting around $18, $20 a share now. Uber's at $21. Lyft is also at $21. United Airlines is at $24, and Delta Airlines is at $21. There are ways to do this by yourself. There's an app called Robinhood. I can't recommend it. Haven't used it. A friend of mine used it, and he said it crashed. So he is currently looking for another way to do his own trading. If you got recommendations, you can put that down below, where you can do fast buys and sells. I'm almost 25 minutes deep into this video, so I got to chop a lot of BS, a lot of tangents out. Maybe not. Maybe I'll keep them all in. Hopefully you didn't fall asleep. But those are my main ones. Disney, I think I'm good there. I don't know if I'm going to buy any more. If it does go down to 80 bucks a share, goes down into the $70 a share, that's something I'm going to have to look at again. Definitely United Airlines. Looking at their past track record, if it goes down to single-digit dollars per share, you have to. You got to go in. United Airlines isn't going away. Delta Airlines isn't going away. They will come back, and you could triple, quadruple, times 10, times 30 your money on something like that. Same thing with Lyft and Uber. Higher risk with Lyft and Uber, lower risk with the airlines. Both Disney and Delta Airlines pay a dividend, something like 1.5% per share. That's another thing I'm still learning about, is these dividends. Share your intel down below so that we can all learn. Anybody who is trolling instantly gets banned. No one will ever hear from you again. So keep that in mind if you want to keep participating in this. And yeah, be nice. What do you want to do the rest of the day? Oh, we're going to go edit this video. Okay, goodbye.